Hey Property Insiders, Mike Stenhouse here, and this is episode 165 of the Inside Property Investing Podcast. Today I am delighted to be joined by Ben and Tom Thorns, who are two brothers living in South Manchester who started working together in a digital marketing agency and for the past couple of years have been growing their Living Smart property business. I'll get them to introduce themselves in a second. But this is the first of our 2017 goal series where we will be following their progress for the next 12 months. Obviously last year we did this series with guys like Nick Leatherland, Anthony Hubbard, Marta and Lloyd Smith, and it was fantastic to see their results. So I'm delighted to be continuing this series again in 2017. But guys, welcome to the show and give us a little bit of an introduction to who you are and how you started working together.
Yeah, so hi, I'm Ben. And this is my brother Tom. So we've been in business together in various forms for the last 10 years. We're a digital marketing business. We've done quite a lot in affiliate marketing over the years. We're originally from Cumbria, so we've got good knowledge of the Lake District and serviced accommodation there. Not something we're into, but definitely a long-term goal to get a holiday home in the lakes. We miss that neck of the woods. But no, we set off in 2006 and we started with web design and then moved through into affiliate marketing. Our intention was always to get involved with property though. We just, when we started back in 2006, quickly realised we didn't have any money. So I thought we'd best try and figure out ways to make money.
Okay.
Started in web design, quickly realised that we were spending a lot of time working for clients who were then going on to build successful websites and thought maybe the value's there. So we started working through affiliate marketing. And then we've just diverted profits from that into property as we've gone along, and then more recently just decided that the time is right for us to take it seriously and go full time on it.
Okay, so where did that interest in property first come from then? You said it's been on the cards for a while. Was there anything that instigated that when you were growing up, or?
Yes, I think so. So hi, I'm Tom, and yeah, we've always had, our dad's always been interested in property. While we were young, he kind of bought a wreck of a house and renovated it top to bottom. He was always really handy DIY style, but he's a civil engineer by trade, so he wouldn't just do small DIY projects. He'd build retaining walls in the garden, so we were always exposed to quite serious things that we just thought was commonplace and normal. And I think the interest in property investing really kind of came about when I was at uni. In my last year, I realised kind of how much my landlord was making from us. We moved into a brand new house in Fallowfield in Manchester that he'd fully renovated, and when we actually worked out how much he'd probably spent on it, we worked out how much he'd bought it for and what we were renting it for, we quickly realised that that's what we needed to be doing.
We had a bit of a light bulb moment, didn't we, when I came round to visit you one day.
Yeah.
We just did the sums on it and thought, yeah, this is something we should be involved with.
Yeah, and that's kind of when we really looked into getting into property, but kept coming up against you need money.
Sure.
You need money, so we then set up the digital marketing business with the aim of getting that money, and kind of got carried away making that money for 10 years and took a step back and realised that now we were in a position to enact the property plan.
So all along that digital marketing agency, the real core focus of that was to raise money. It wasn't a business that you were passionate about at the start with. That was just a means to an end.
We've enjoyed it and it's been really kind to us.
It's been a huge success.
And the great thing about that was we ran it completely remotely. So for 10 years we ran that business, and when we started it I was in Switzerland, you were in Kent, and I was in Cumbria. We've always been fairly nomadic, and I think some of those principles of running that business remotely and digitally and paperless, we've taken across to our property
It's always
business.
been set up like that, and even the property business we set up now, it's 100% everything we do is paperless office. It's all online services, software as a service, and that, like I said, really stemmed from the start with the digital marketing business, because while we were running it remotely, I actually took 7 months off and went travelling around the world.
Nice.
Took a laptop with me, and I could still work as and when was needed. You did 3 months in South America.
Yeah.
So it was great. It's a business that we've enjoyed running. It's just not where the true passion is.
Yeah.
I guess property is the true passion. We love the results that you get with it. We love taking old buildings that are unloved and underutilised and bringing them back into use. So I guess we've just got ourselves into the point now where we can really follow our passion.
Yeah.
But we did invest in some properties along the way. So in 2009 we bought a couple of apartments in Manchester from distressed developers, big developers, and they worked out really well. We doubled our money fairly quickly with those.
Yeah.
It was pretty scary at the time buying them at the height of the credit crunch, but they worked out really well. And then in 2010 we bought a couple of HMOs close to universities in Manchester.
Yeah.
And that was when we decided that was really going to be a cornerstone of the investment strategy.
It was seen that the income that we could make on those HMOs, obviously the gross rent, but obviously the actual net income at the end of the day on those HMOs compared to the apartments that we had, that realised that if we scaled that strategy, we could replace the income from the digital marketing that we were taking. We never took all of the income that was made in that business because we didn't think there was a long-term solution with it. Whereas with the property, we know that if we invest the money we've made on the digital marketing side into the properties, we know that it can give us a long-term sustainable income, which we never really felt confident with in the digital marketing business, which is why we put it into property.
Got you. And obviously one of the other results is this house that we're sitting in. So currently sat in Ben's house.
Yes.
Tom's is the adjoining
just through there.
Semi next door.
Other side.
And you built these a couple of years ago?
Yeah, so we completed, it was summer 2015, wasn't it?
Yeah.
I say completed, there's maybe still a couple of jobs that need to be done. I'm sure Cassie will tell you about that. So yeah, that was a pretty long project really, because we...
First venture into new builds?
Yes, it was, and I guess quite a large project to undertake because it's overall 500 square metres.
Yeah.
We took it back to planning as well. We weren't really happy with the existing planning on the land. It was a garden plot for quite a large Edwardian house. And it was the planning had gone through in typical style, very easy to put through in like an Edwardian pastiche style, which wasn't too comfortable for us. So we decided we'd go back to planning, but then there was all kinds of hurdles with that. We the Section 106 payment all of a sudden went from £6,000 to £36,000.
Wow.
We had a real battle with that, which we took on and won eventually, but it slowed us down for a year. So it was a great project in that we learned a lot doing it.
Yeah.
And obviously it's given us the confidence to work on bigger projects now as well.
We'd looked at that idea and toyed with the idea of building a house for a long time as well. And one of the lead generation businesses we did in the digital marketing business was generating leads for self-build type companies.
Okay. So
we did have a good handle on it, but we just figured that doing a self-build was a good, easy, quite low risk way for us to prove ourselves as doing a big development.
Sure.
Finance is a lot easier if you're going to retain them as self-build. So it was our way of kind of proving to ourselves that we could do a project of this size. 500 square meters is you could do a 500 square meter 10 apartment build. So it's a considerable. Place. It's considerable development to be taken on, but we're confident that we can do that again and bigger. Yeah. Which is the main benefit of doing it. It's given us that.
So over the course of only a small number of years, you have done a lot of different types of property investing with apartments, HMOs, new builds. You're talking about you'd like to go into serviced accommodation, so you've got a real breadth of experience. What's the core focus? Would you say that is HMOs?
HMOs,
or has been until this point anyway.
Definitely HMOs and bigger projects now, commercial conversions. We really like the idea of scaling up and working on larger projects, multiple units. And we're also sourcing land, so we're developing a sourcing part of the business now, and we like the idea of build to let. Mm-hmm. So if the right deal comes along with land that we could retain, then we'll make that part of the portfolio as well.
Okay.
But then we're really looking at probably more focus with that land sourcing on development, and then even just flipping on with planning gain to other developers.
Yeah. So up until this point then, what was the appeal for HMOs? What was the reason you picked that over the other?
It was purely cash flow. We wanted to replace the income we were taking from the digital marketing business with an asset-backed income, and HMOs was the best strategy for that.
The other thing there as well is the area we're in, South Manchester. That was the thing that attracted us to Manchester. Was we'd both been to university in Manchester. Where we were from in Cumbria, it's just not a strong enough property market there to really scale a large property business. We both knew Manchester. It was in the middle of where we both were at the time. You were in Kent, I was in Cumbria. We knew the market, we knew the HMO market just from being in university. It just seemed to make sense for us to get more heavily involved.
So you made an active location choice based on the desire to be in property as well?
We decided we wanted to move closer to each other so we could, we worked on the business remotely. We decided we were going to do it as a property business going forward. We needed to be in the same location. And Manchester was that location. It was central for us both. We'd both been students here and actually lived in HMOs in Manchester during that time at university, so it made sense to come to Manchester to set that business up.
Okay. And since you got started, what would you say has been your biggest property success so far?
Probably building these houses would be the biggest success.
Pretty nice place to be set.
Yeah, that's it. It's quite nice to be able to come here and move to Manchester and end up in a house that we don't see us moving out of for a while yet. It's a nice place to be. But also, with the portfolio we've built up over the last 3 years, it's professional HMOs in that South Manchester Article 4 area. So even on an income and capital growth level, they've been a great purchase. We were buying tired student properties that couldn't be let from landlords that kind of just saw them as a bit of a liability to them. We were converting them into really high-end HMOs for young professionals. We've got 4 in Manchester and 1 in Sheffield, and they've been a really good buy. The kind of, when we're looking to buy more of those in the Article 4 area now, it's a bit price prohibitive in that. Hence, we actually sold 2 at tail end of last year just to release equity out of them. They weren't our core market, they were kind of student properties through and through, those ones that we sold.
Okay.
So it made sense to offload those, put the equity in the bank to use this year on projects, but
sure.
We've still got the 5 in the portfolio that make really good cash flow.
Okay, and on this one, because obviously a lot of people are interested in HMOs and a lot of people have come on the podcast that have got HMO experience, we know the figures around them inside out. As a new build that wasn't purely from an investment point of view, I guess a lot of the decisions you made on this were with your heart rather than your head. From a financial point of view, did it still turn out to be a good deal for you?
It has, definitely. Yeah, it's worked out, and even more so over the last couple of years. That's a lot
just
to do with
appreciation.
location.
Okay.
Yeah, Altrincham has just seen a lot of capital growth over the last couple of years, but looking back on it, those emotional decisions, we could definitely have done it in a leaner manner, but then it would have been a pure development. It wouldn't have been our houses.
Yeah.
So I mean, there's some lessons that we've learned there, isn't there, that we can apply to pure developing. But it's pretty difficult to, I guess.
It's quite tricky to make those decisions of what tiles do we go with, what flooring do we go with, what kitchen do you go with, when you're going to be using it day in day out, and especially when the wives are out involved in decision making as well. It's tricky, but we've ended up with great houses that it does still stack up.
Yeah.
But we also know that on another development, we've looked at the whole range of what we need and what options are out there, and what decisions are available. We know that we could make savings on what we've done on these ones going forward.
It's interesting. So I often find that a lot of people try to put a real barrier between the two, between investment properties and your own home, saying that you need to think on investment properties, you need to think all with your head, no heart in it. But even just walking up to your office here, there are things that you have done because it's your own home that you might not necessarily have done if you were doing it purely to sell on. You've got beautiful kind of 2-story windows in here and all sorts of nice features that you might not have done if it was all down to cost. But all of those little decisions will surely have an impact on the cost when you come to sell it as well. So although it is a decision you made with your heart, it's probably still had an impact on the value of it. Yeah,
they definitely will. When you look at a standard developer spec home, throughout the country, maybe not so much in Altrincham, because we get some really high spec homes around here, but when you look at the standard developer spec and then what we've got here, there's definitely a premium with the kind of things we're putting here. We haven't done anything stupid by any stretch, but we've got aluminium windows and nice details that, whilst not breaking the bank, it's a developer wouldn't maybe put them in if they're a volume builder. But in certain areas it works, and certainly in Altrincham there's would command a premium.
Yeah, so you still get that payback on
on
your own touches as well. What about at the other end of the spectrum? Any deals that haven't gone to plan? Is there anything you look back on and think that was painful? That was a bit, maybe not necessarily a mistake, but you took some lessons from it.
Definitely planning for this. It was really difficult. I think probably if we know what we know now, we might not necessarily have gone back to planning and changed. Yeah, it was.
Yeah. You said it was one house that there was approval for initially, or
it was approval for a pair of semis.
Okay,
it was just
a bit more traditional style.
The scale and massing is effectively the same. We've just added more of a contemporary design aesthetic to it, but it was a complete change. It did have to go right back to planning, and then there was committee. There was the whole raft of issues with it, and them changing the Section 106 payment. They even said to us at one point that because we were self-builders, we should expect to make less of a margin on it than a developer. There was just some shocking things.
Is that a councillor by any chance?
It was the planning department. It was just, it really came down to that. It came down to what margin are you making on this build, and we were saying, we're self-builders, but surely you should allow us a margin for error here.
Yeah.
But it got pretty difficult, and it went on for a long time, didn't it?
Yeah, well that was it, because we bought the land with planning, so we could have essentially started discharge conditions and started day one when we got the land. But we wanted to take it back to planning and just change it slightly, make slight tweaks, which the actual changes we made, the planners were happy with, but they'd since changed how the Section 106 was calculated, so they were going to charge us 5 times more on that, and there's just so many little things to go, and that made we had to withdraw the planning application, then resubmit it, then it cost us about 12 months in the end, and we've got great houses at the end of it, and they are by far better than what was approved, but it would have probably, we'd maybe be where we're going to be at the end of this year.
Yeah.
Now, if we'd have got these done a year quicker and we were where we wanted to be property wise, so
we were tying up our own funds as well, during the development, so it would have meant that we'd got that out a lot faster.
And you said with hindsight you might not necessarily have gone back to it. Equally with hindsight, because you've got these beautiful houses for your families now, it's nice that you persevered. Without saying I just wouldn't have done it, is there anything you might have been able to do differently to get that through quicker? Is there anything that other people who are about to go through the same might be able to take advice from?
There's so many little learnings along the way that we were just meticulous in taking notes, weren't we? Whenever we had site meetings, we were just thinking we will do more of this. So whenever there's something that we felt was a learning that we take on to the next project, we've got it, and we've got a whole list of these things. I'd say a big one for me was utilities. We've just decided from now on, any project we do, whether it's new build or commercial conversion, we are in control of utilities.
Okay.
We just don't feel that, even when you scale up to really big projects and you've got really, really good main contractors that are completely organised and ready for this thing, I just don't feel as though they'd ever be as motivated to take on the utility companies.
And that's what getting the new utility connections essentially. We're on quite a busy road here, and there was just a lot of factors that just meant that it was just the utility companies wouldn't dig under scaffolding when it went. They didn't even have to dig it at the end of the day. It was then down to us and the main contractor to do the trench. So there was just so many headaches with the utility connections that then we had a generator on site for months. We knew there was going to be headaches. You do, don't you? Going to projects, you know you're going to get headaches with planning. You know you're going to get headaches with utilities, but until you've actually experienced it, it's just quite difficult to comprehend that whole process. Yeah. But we were effectively going through the main contractor to motivate the utility companies. If that had just been us direct, I would have been calling them every hour if it came to it, just to get things through.
Whilst in your case it was specific to utilities, I think that point of no one is as passionate, no one is as accountable as you are on your own projects. It applies to every aspect of it. You need to really be in control. If you want to be successful, you need to understand what's going on.
Definitely.
You need to have a good grip on every single person and every piece of the puzzle that fits together.
That's it. That's how we ran this build. Essentially, we employed a main contractor to do everything, and then we ended up just taking packages out and taking packages out and taking packages out and handling it more ourselves, because got to the point when we knew we'd do a better job and save money in doing so. So if we were doing a project like this again, we wouldn't employ a main contractor. We'd just break it down into stages. You'd get a groundworks company and you'd get somebody in to do the shell, the roof, wind and watertight, and then internally it's just a large renovation. It's exactly the same as what you do when you renovate a house. It might be on a bigger scale, but it's just first fix, second fix, plastered, fittings, and then it's not that hard. And I think that's what we really learned from it as well. It's scaling up to doing multiple units, bigger projects. It's not that hard. It's just more of the same.
It's probably just a confidence thing. Until you've been through that, you think it's going to be more complex. You think there's going to be more elements to it, but
and the benefit is when you do larger things, you get better contractors, you get better professional advisors. In a certain element, it gets easier as you go larger. I suppose that was one of the learnings to take away from that.
That's it.
Take more control.
Okay, so that gives us a lot of insight into how you got started in the property world and some of the stuff you've been working on. But obviously, the whole point of this is that we're going to be tracking your progress over the next 12 months as you try to scale and continue to grow this great business that you've already got. So let's start off with your goals for the year ahead. Tell me a little bit about what they are and how you decided on what you're going to spend the next 12 months focusing on.
Yeah, certainly. So the biggest goal, the one that we're most focused on, is to increase net cash flow in the business to £12,000. Up £12,000.
So an additional
£12,000. Yeah, and we suspect that will result in an increase in equity of about £500,000. So we're targeting a total portfolio value of about £3 million.
Okay.
That's kind of secondary though. It's really the cash flow that we're focused on. And in order to achieve that, we're looking at a couple of large commercial conversions. Mm-hmm. So we're going through legals on one at the minute, and we've got offers in on two currently. So we're hoping that we'll get moving on those pretty quickly and get those completed before the end of the year. And then the other element that we're just starting to work on, starting to build out the processes and really apply some effort to, is rent-to-rent deals. So when we're around South Manchester, we're constantly seeing underutilised properties. There's some large landlords with large portfolios around there who I guess don't realise how the market's moved on. So we're targeting those landlords and saying, look, we can work with you. You can comfortably achieve what you're already achieving and more, and we can manage that asset for you basically. So yes, that's another big focus that we're starting to work on.
Okay, well, we'll chat about each of them in a little bit of detail, but just to get my head around the reasoning behind this 12 grand a month goal, it's going to be a great boost to anyone's income. even when you split it between two brothers, it's still a healthy boost to your income. Was there the reason behind that more what you think you can achieve and that equates to 12 grand in the year, or was it a case of that's a specific goal that gives you a lifestyle that you want and we want to get to that stage within 12 months?
A bit of both, really. When we're setting goals, we always work back. Well, we look initially at what our personal income targets are,
sure.
And then we look at what the business needs to make in order to do that. So the 12k net cash flow per month figure to the business, obviously there's a lot of other things factored into that, like the overheads of the business and staffing costs. So that's where we came to that. It's it's not necessarily what we'd be taking out, but it's what we need in the business for us to be confident taking that out. We do still take an income from the digital marketing business,
okay.
So there's a bit of replacing that income still. We've almost replaced that income from property, but not to the level that we want to take out. So that's where we come to that figure from, and like I said, that's just a process of working back from it. So we'd say what we need to take out, what the business needs to make to do that, and then we look at what assets we need to have in the business to generate that, and that's where we come at the commercial conversions. With the ones we're eyeing up, the deals we're doing at the moment, commercial conversion wise, they're around about 3k net cash flow per month. So if we got a couple of those in, we'd be halfway towards it. One of them's already going through legals now, and like Ben said, I think we've got offers on about 4 now, but varying stages. We only need one of those to come good. If more come good, then we'd probably look at JV options with that, or potentially sourcing them on from there. And with the rent to rent side of it, we're typically looking at rent to rents that are doing around about £600 to £1,000 a month cash flow.
Okay.
So if we got 6 to 10 of those through the year, then that would get us to our target. So the target seems reasonable from past experience, and it really just sets the business in a good firm footing for where we need it to be.
Yeah. The thinking with a lot of it as well is like the rent to rent, for example, we've got the vast majority of the systems and processes already in place. So for the existing portfolio, we've been meticulous about making sure that we're processed and systemised, and we've just handed that over to a full-time member of staff. So she'll be working on lettings, but also project managing with us as well. She's actually studying part-time to be a quantity surveyor, so super keen and good. She's
a great addition.
Yeah, really good addition to the team. So it's a mixture of confidence, having systems and processes, and just really feeling that we're now in a position to scale this up.
Sure. And give me an idea of the timings then. Obviously it's not going to be linear, £1,000 additional per month every month for 12 months. Some of these commercial projects could even take longer than a year. So how do you see that increase towards 12 grand progressing over the next 12 months?
So the commercial conversions, we want to get them at least started this year. But probably, definitely, I wouldn't expect we'd have both of them fully up, running, refinanced and making that kind of 3k net by the end of the year. We might have one of them, depending on how planning goes, on it. The rent to rent is where we see a much quicker income from, and we're negotiating with kind of 3 landlords currently. 2 of them have got good portfolios, so if it goes well there, it that might scale within the first 6 months, but we'll take a wait and see. And we've only really been doing it since kind of mid-December, but with having existing HMOs that we own and we've renovated to a really high standard, when we're showing other landlords around them, they really kind of get a trust in us and know that we can deliver on the promises we're making, and we're doing it ourselves with our own assets, and we'd be able to look after theirs to the same standard. So that's been quite good. So we'd anticipate the rent to rent setting up quicker. We want more traction within the first 6 months on that than say with the commercial conversions.
But I guess with that, it is about getting the foundations in place. You said you've got one deal going through legals just now. That money, although not in the bank, you're going to be fairly confident that it's coming at some point down the line, and it's about, with these longer term deals, we appreciate they take a longer amount of time to get over the line, but we I guess with the rent to rent, it's a nice balance. You've got some instant income from them, you've got these bigger pots of income coming down the line, and you know that 12 grand is going to be bankable at some point in the future.
That's it. And the rent to rent really enables us to be confident that we can take on more staff to handle the things which we see as taking a lot of our time, which isn't time well spent. Up until kind of last year, we were doing a lot of the letting side of it ourselves, whereas now we've got in-house staff that's handling that for us. It's freed up a lot of our time to then source and work on the commercial deals and the land
the land sourcing is almost additional to this, in a sense that we're really focused on increasing the net cash flow and scaling the business in terms of staff, but we're also really focused on the land sourcing, but they're a bit harder to quantify, those deals, even if just 1 or 2 of those come good, then they'll make a really big difference to us in terms of a cash injection, and then also the number of deals that we can then start to look at for ourselves as well. And then also joint venture partners. If so, we've worked with a couple of joint venture partners already, and now that we're starting to source larger deals, we're convinced that those deals are going to appeal to more of the joint venture partners. So there's good scope for us to start working through those as we progress throughout the year as well. But definitely with the rent to rent, it's just we know that can happen relatively quickly.
Okay. And have goals always formed a big part of how you work together? I guess with two of you, you need to be clear on what each of you is working on, where you both want to end up. So if they always formed a part, even with the digital agency, you've always gone through this process of sitting down thinking about where you want to end up and how you'll get there?
We always have. We've always sat down and taken a look at kind of the bigger picture as it is, and decided where we're at now, reviewed everything, where we want to get to, look at what's worked well, what perhaps hasn't, and then put that in a plan going forward. We've never been as religious at following up on it throughout the year or over the kind of time frame as we probably should have been. We've generally kind of worked towards it and then sat down again and refreshed and, like I say, what did work, what didn't work, more of what did, and carry that forward.
So it's that accountability now, which this obviously helps with, but also on a weekly basis.
Oh, no, it's just the three of us here, no one else.
No one else. So on a weekly basis, we're at the end of the week, we're reviewing the week.
Okay.
And we're doing this religiously now. We've built a process around how we do it. So we review the week, what's been good, what hasn't, and then planning the next week. And then when we plan the next week and the important tasks and projects that we want to be working on, we're really looking at that figure, at that income figure, and are those tasks that we're doing moving us towards that, or are they just things that are taking up too much of our time that we can get rid of, delegate, automate. So
that's it. That review of the week kind of starts at what's the goal? What are the strategies to get to that goal? What have we been doing this week that's moved us towards those that goal that's got those strategies into action? And if we haven't been doing enough of it, we have to make changes. And if that's us, we've spent too much time appraising deals, we have to get somebody else to do that for us. If we've spent too much time on one thing or another, it's about how we can free up our time to really push forwards towards those strategies.
Something I didn't ask at the start, but it's kind of quite clear that it's an advantage, is that working together, I don't know if you think it's a pro or a con, the fact that you're brothers, you've obviously got a close relationship, that accountability and that ability to sit down every week and say, okay, we've spent too much time on this. It must be great to have that sense check rather than just trying to figure it all out on your own.
Yeah, it's always worked for us, hasn't it? So when we were working from home, for example, a lot of people would say, how can you do that? How have you got the discipline to go? And we would, 9 o'clock every morning we'd be there. And I think it's because we both were doing it. We were opposite ends of the country, but we did keep each other in check with that. I think the flip side to it is that we're very similar. Our challenge in terms of growing this company is bringing in people who are probably going to challenge our views and our opinions and make us look at things differently. That's something that we're really conscious of moving forward.
So in terms of the different strategies then that are going to get us towards this 12 grand a month, you said the big one is going to be commercial to residential conversions. We're talking HMOs there, or could that be apartments that you then sell on? What are you thinking?
Case by case basis, but definitely a HMO element. So we've developed the HMO lettings in-house. We can take care of that. We always wanted to do that just because we wanted to be really hot on customer service, and we weren't convinced that we'd be able to trust anybody else to do that. So HMOs are always something that we're looking at. Every deal that comes in front of us, is there a HMO angle? But it doesn't necessarily have to be that. We'd happily look at splitting into apartments if that makes sense.
We've looked at the kind of micro apartment style as well. So if it's an office that we can do under PD to small studios,
Resi Merchant type
that kind of thing. Whereby you don't have to abide by the strict planning room space sizing when you're carving these up when it's an office to resi. We've looked at that for small studios. That's something that really interests us, or the HMO route. But essentially, it's a pure cash flow strategy. So we would do build to sell or something like that. Commercial conversion, carve it up into apartments and sell it if it made sense. But it's not our initial strategy. Our initial focus when we're looking for the deals.
And tenant profiles for these, are you going high-end professionals? Are you looking at LHA markets, somewhere in between, a mix?
Currently professional tenants, and we're looking at some areas now that would be more suited to blue-collar workers. LHA is something that we think we would probably just have to spend too much time learning that market, that it wouldn't necessarily make sense for us to do that. But if there was something in an area where we knew there was a really good agent who understood that market, then we'd consider that. But for us currently, we just don't feel as though it's worth us investing our time learning that new market.
And then on the rent to rent side of things, is that a similar model? Again, you're going to be looking at HMOs, shared houses.
Yeah, that's it essentially. So there's kind of two factors in it. We're looking within the Article 4 area of Manchester. We're looking at existing properties. So similar to what we've been buying in the past, tired student properties that the landlords are struggling to rent. We go in and do a bit of a refurb on it and rent it out to professionals. Or in other areas of Manchester, where there isn't an Article 4 in place, we'd look at taking large family homes and doing them on a shared house multi-let model.
Okay. And then the final thing you mentioned was the land sourcing that I guess doesn't necessarily fit into the 12 grand a month target. That's maybe an additional 20% of your time or whatever, but talk to me a little bit about that, because that's really interesting.
So yeah, the land sourcing is really interesting. It's something we've been slowly doing over the last 12 months and really started it in September. We had an employee who was working with us part-time, getting the letters out. We'd identified a lot of sites over the years. We've got a shared photo stream on our phone that we'd always just snap photos of sites that we thought had potential. So we had the employee on to kind of get letters out to those, process them. We've got a full CRM system set up.
So you're sitting on the tram, out for a walk with the dogs, driving into the city centre.
You should say tram, actually.
You see something, take a picture of it, and over the course of a number of years, you built up this log of every interesting deal within Manchester.
One of the most promising ones was
spotted on a tram. So we're negotiating with those now. We've got a meeting with the owners there in about 2 weeks' time that we're going to put our offer forward. So.
You got your employee, then you could get someone on Upwork or any sort of just to go on Land Registry, Google Maps, find out where this property is, who owns it, what the situation is, and then just target them with a kind of direct landlord letter.
It's a series of direct marketing letters. So it's really been building that process, and that's where Podio is coming really useful. We've got a great setup on Podio now, but in terms of finding them in the first instance, you really kind of need a trained pair of eyes on it. So we've tried with so we had this member of staff in who was working through Podio, and at times when maybe we didn't have enough deals in there for him to push through to the direct marketing stage, we were trying to get him to find plots, and there was certain success with that, wasn't there? But it made us realise just how much we actually understood about the process, because there's so many things that can knock a deal dead.
Very difficult to train someone on, but just years of knowledge and
highways. There's so many little details that you need to be aware of, isn't there?
But with that land sourcing, how we